Welcome everyone to the Kendall Report. It is Wednesday and will be the final broadcast for this week. So remember, I won't be live Friday, be back next Monday. So happy Thanksgiving to everybody here in the U.S. and hopefully you have a good, safe holiday. So interesting day yesterday. I kind of miss, I keep missing my evening shows just because you get an opportunity to really talk about what happened in the previous session, and instead here we are getting ready for the session, so it's a little bit different. I still am working on the format, and I think it's working out fairly good, so I'm pretty happy about what's going on. But a couple things, just a real quick review of what's went on this morning. We had claims come in at 240. They were expected 225. Continuing claims 1.55 million. I've been talking to you about that $1.5 million level, the 1.55 million continuing claims for a while. I think we're starting to see some things that are going to climb here, and I'll show you here in a few minutes. We'll get through market grid expectations. We'll go through everything. Durable goods also came in at 1.0, but yesterday was pretty impressive. And if you recall, when we were doing the broadcast yesterday, I said that first hour looked like it was going to be a negative hour, and we're going to start to see some positive. It was going to trend positively on the hourly graph. And those of you that have the indicators, you know these things got stronger as the day went on. It was projecting really strong numbers, and that's exactly what we got. Close over 4,100 on the S&P cash. We traded up into this 41 handle. And what's interesting right now is it looks like to me we're going to see the opposite of what we saw yesterday. I think maybe ahead of the Fed FOMC minutes and just a fair amount to at least set up for today. Let's go ahead and take a look at what's going on here in the markets. As right now we're at 4,008, only down 2, but we were up some decent numbers. We printed up to 40.21, I believe, high on the futures. We'll take a quick look at that in a minute. We're looking at the 10-year at 373, down a little bit. I think we're going to continue to hang around that 370 handle, and I still think it's amazing what's looks like that the 10-year is going to continue to decline into, some crazy numbers, maybe even 3.5. I'll go through all those details as well. Just looking around, dollar down a little bit. I think that's the other story that's kind of brewing in the background is the dollar is peaked. And what I've been telling you, I covered the dollar the other day. I'm not going to do that today, but really, the dollar is starting to stabilize at these levels, but I don't see new highs, and I don't see a lot of downside just at the moment. Last time we looked, I'll cover that as we get into next week. As far as anything else is going, nothing really going on. Crude oil down 3.25, back into 78 handle. Look like we're going to rally a little bit. XLE, the oil stocks had a good day yesterday, but everything looks like it's trying to claw back a little bit. Not a lot of confidence in the action so far this morning. Let's go ahead and let's take a look at the market grid here, and just get into some of these. See exactly what the setup is here right now. We're looking at. Let me get this up on the screen here. Sorry about that. Yeah, so we've got some interesting numbers coming out. This is the daily market grid right now, 21 high, 23, R1 was 23. So we basically printed R1, S1 97, so we're almost S1, R1. I think we can expand this down to an S2, looking at maybe an R1, S2. I don't think we're going to be able to print up into the 37 handle, but we'll see what comes out when we get into the algos here in a few minutes and get everything set up here as far as the open goes. let's go ahead and take a look at the NASDAQ as far as those settings go. NASDAQ is set up in a same kind of configuration, of course. R1 11,807, the high's been 11,793, so just short of that. The low's 11,720, and S1 11,701. So I'm thinking we expand to the downside. I'll set that up, like I said, when we get into the algos. Just looking at what I was looking at a little bit ago. We'll see how that all sets up. And those of you that are in the live trading room, we'll see you at 1 o'clock in just a few hours from now. So I look forward to that session as well. But we're just looking at these patterns, and while they're bullish, we also have a contracting market grid. So lots to talk about on the technicals here in a few minutes. RTY set up here. We're looking at the high 67. R1 was 1870. On the downside, S1 1856, exactly 1856. So we printed S1, R1 just short of the R1. Still looking for some potential of this market just rolling back a little bit. I'll show you in a few minutes, we get into technicals, but the algos are suggesting that today is pretty much the end of this little rally. We were supposed to have one more day up, which was yesterday. Got way stronger. We printed all the way up into just short of an RTX high on the S&P futures yesterday. So, I don't see that kind of action today at all. Come back to the main screen here for a few minutes. We're about 5 minutes out from the opening right now. We're just really, like I said, starting to pull back here up on the right-hand side of this. I'll put my cursor over there. This is the 5-minute S&P, and so we're trying to actually roll over here to retest the lows. We'll see what kind of setup we'll get here in just a couple of minutes. But as far as I can see right now, looks like we're going to probably try the 97 handle. That's 43.97. We'll get to that. We'll probably see an 80s print down here. We'll, as we come into later in the session, this is going to be, I think I'm looking at, just as I started today, we have a lot fewer live folks watching. So I think everybody's kind of starting to cook the turkeys and off on their in the holiday mode. So, and Friday's just a half a day session, so no one's going to be around for that. I've seen some crazy things happen on those half-day sessions, but I don't have a lot of expectations. I'll set up everything I can in the technical sections today. So let's go ahead and get ready for the screen here and get up here on the level 2. From here, you can see we're getting some downward pressure here. We're trading at 4,005 here, just kind of pressing him down here at the moment. So where the low of the day is 402, so we could punch out new lows off of the opening here. And I'll get all of the like I said, we'll go through the algos right after we get through this opening. We've got about 2.5 minutes to go. Just looking at, just make a couple comments on the Fed minutes before we get going. I don't think there's any surprises coming out of that. Maybe there is, but I don't expect there is. Everybody, I was just looking at the news line here, and everything's about inflation. The ECB, everybody's just inflation. That's our biggest threat. That's our biggest threat. I told you the other day, these guys all have the same lines. They all have the same lines: inflation, inflation, inflation. So they're going to continue to raise these rates. And like I said, we'll probably see more of an inversion of the yield curve I know, and I'll go through all these details. I know everybody's centered on the 210s. There's nothing. That's a nothing burger. I can tell you right now. What is significant is the back end, the 5s and the 30s, and 5 and 10s more so than the 2s. The 2's just a headline because it's the most inverted. They're going to use that as the headline for the inversion. So we're pretty close here. Looks like we're just about a minute and a half to go. So let's see what kind of yeah, I just had to get rid of the Frankenstein report there. Sorry about that. So let's take a look at, yeah, just kind of starting to stabilize here right now. We're in the final few seconds before we get the opening here. So get ready. Yeah, I'm just looking at some of your comments before the open here. There we go, folks. We're off. Remember, if you want to get rid of most of the delay, if you scrub back a little bit and then go all the way forward, you'll get rid of probably about 85% of all the delays in the stream. So got a little bit of a bid coming back in. Here's 07. The midpoint of the session so far is 40.1125, and we're printing 08s right now. So this is pretty typical what we see. We get this little bid comes in and then they reverse it. We'll see if we can get up toward this maybe 0925. That might have been it already. This is pretty typical start of every day. So I think that as we go through the session today, and those of you in the live room, maybe come up with lots of good questions and things that we can work on today, because I think markets are going to really calm down. Maybe we'll get some activity, but I think everyone's got one foot out the door. If you are in the office, they're already moving out the door here. So here we go. We printed up into that 0925 I was talking about. 11.25 is the midpoint right now, and really nothing there. Let's go ahead and get into the algos and take a look at what's looks like going to unfold there. So let's start off as I usually do. This is the 1 minute chart here that I have up here, and the algos we're predicting this probably be a better. We should look at this before the opening actually, and we will next time. But this was projecting. You can see projecting for prices to move up here. We're coming up to the 200 period moving average on the 1. I'm going to go over to the 5, and I've got something here that hasn't been released just yet, but it's a probability map on the moving averages and how they're going to hold and all that. But we're seeing, as far as the 5 minute goes, it looks like this is probably going to peak out. We'll get some stable, so I suspect some sideways here. Now let's get to the hourlies, and this is what was earlier when we were coming into this print. We were starting, there was projections about a half hour into the coming into the opening about a half hour ago or so. We were getting downside projections. It looks like what's expected here is that the 10 period moving average is going to be the ceiling here, and we're looking at 40.12 right now. 08 is the 21, and then the lower average is down below here at the 40 is right now at the 98, so that puts us to that 97, which is the S2 number that I talked to you about just a few minutes ago. So it looks like some stable sideways here, and and it looks like from the standpoint of what's going on here is we're going to end up range bound probably above 94, and if we break below this 97, 94 level, then go to S3 on the market grid on the daily. So look for that number, which I believe was 80, 84. So we'll look at that when we go through the normal technicals here in a minute. Let's go over to the NASDAQ. Same configuration. PPM2 is suggesting we're going to go, actually not even going to go negative. So the support levels on this is going to be right here at, just get this number, 11,740 is going to be right where the support is right now. So look for more sideways here for just the next several hours, and kind of really it looks like we're going to just get a sideways chop, and maybe we can finish out everything. And I'll talk about a couple of things here. I'll talk about the database expectations for Friday's close, since we're not going to be here to talk about it more. But the bottom line is, it looks like stability. Probably stay right above that 740 level, 11,740, and a break below that. Just we'll review when we get into technicals where the next level is. But look, those of you have the market grid, just look at S2 for the next level down. We're printed right around S1 already. Look for S2 to probably be the bottom end. Like I said, R2 I think is going to be a tough one, but who knows? Maybe there's some thin conditions and they can bid the market up like they did yesterday. We'll see here. Let's do the RTY. RTY had a little wider spectrum, but it's interesting because RTY has a little different profile. It suggests that we're going to see sideways as well. There's a slight more upward pressure here on RTY, but ultimately it looks like a sideways band. You can see on this hourly chart here that we go for multiple hours and just consolidate here, and it looks like this is a high level consolidation. We certainly should stay above the 40 period moving average on all of these. So we'll get into more of that in just a couple minutes. So let's go ahead and let's get into the database and take a look at what's going on there. All right, so we upticked just a little bit. We had 248 buy signals for this morning, 168 sells. On the short-term database, we're at 81.94% bullish, and I'm going to keep showing you this forward-looking chart. So what this means is there's probably at least one more cycle. I'm going to go full screen so you can see this. Right now, all 12 sectors are positive. The models picked up. The most recent one was the technology and basic materials were picked up on a sector level on our database, and everything is positive. We're looking at non-cyclical up 10%. The energy still up 15%. And that's been on for 36 trading days now. So that's the better part of a month and a half. We're just looking at a couple of these already capital goods. If you look on the far right-hand side here, it says where it has a hold. That just says that we've met our normal holding periods or exceeded them. You'll notice that on capital goods, we're 35 days of 29. So normally this model has a holding period of 29 days. We're slightly exceeded that. The max it showed you over here has been 75, and all the max numbers are here. So these things can extend. We're looking at right now, the other holds are financial. which had been on for 34 days, a 7% gain. And now I'm not going to open these up, but a lot of these sectors have literally hundreds and hundreds of symbols in there. So it's a composite of everything, a non-weighted, equal-weighted composite of the of all of the stocks in these sectors. So this gives you a pretty clean view. There's no overweighting like the S&P. There's no cap weighting or anything like that. So just expect to see, this kind of start to rotate. And this will be the thing that it looks like, just to kind of set you up a little bit, is areas you want to watch is capital goods. And you're looking at, like I said here, we're looking at the financials, and then finally down below transportation. Those are going to be the first places that we're going to look for some sort of rotation. Okay, so what we're looking at here is the overall sector rotation. Let's go over to the weekly, and just so you can see what that looks like right now. Weekly are much thinner. We just have healthcare, services, transportation that have been on. They've been on for a couple of them. Services has been on for about 81 days, but you look at this, their normal holding period is 160, 180, and in fact, conglomerates has a 427 day. That's 2 years for the record. That's about 220 days in a year. So we're looking at this database is at 32.42. I'm continuing to expect to see this start to increase. You folks should know that the magic number here is the magic number is 42%. So let me just bring up something here real quick, just so that you can have this this on here. I showed you this yesterday, but once we get to 42%, that's a critical mass, and then that will drive prices higher. And this is the layout for the intermediate database. So everything once we hit going forward will move us out. You can see this has the actual what happened going back to 2020, and you see that carried us forward for about a year forward to where we started to get below the 42 and got into liquidation, and that was around the peak of the market, which was right into the beginning of this year. So we're now seeing a new cycle starting to form here, and we still haven't got confirmation and got back to certain levels, but we'll see. Like I said, we're in the 30 handle, 32 handle, so we'll see what happens from that standpoint. So as far as, like I said, on my expectations coming into Friday's run is that we're going to see probably some positive rotation. I don't know that we're going to get over 42%. I thought we had a good chance at it last week, but we didn't get that. So we'll just see what sets up and read the numbers and go with the data. I would do my best to get this stuff out to you folks and get maybe on Twitter. So if you're following me on Twitter, it's expert with no E. It's Twitter/XPERT. You want to follow me there. And I'll put something out over the weekend for those of you that don't have Wavetech. I will make sure you get that out. Okay, so let's go on and let's take a look at the S&P. So going to the S&P here, I thought it was interesting. We got new Fibonacci targets. So you see these dots where my cursor is here. These were the old targets. Those were targets of 4130, 4292, and 4393. You see there's some new green dots above the market. So yesterday's action actually, and follow through with today is actually generated a new upward Fibonacci projection. The min now is 42.59, 43.91, and 44.73. So these are new numbers, but this is the interesting thing. And the patterns generated this, and I won't go through and show you exactly why this is coming up, but the algos are suggesting, you see today it shows that we're going to turn down on Friday, and we're ultimately going to see the 10-period moving average roll over. This is the projection. Whether we get as weak as we thought we would, as it's projecting, we'll see, but it does suggest that we could roll back. And I talked about these numbers yesterday. Fib target 1 on the downsides around 38. 38.40, 38.25 is a possibility in this pattern. If we trade, if we can close over that 200, which is 40.29, I think that's a tall order. That would put us, as we look at the market grid today. Let me put that back on here. Yeah, so the market grid for today, 40.23 is R1, R2 is 37, so we'd have to close close to R2 to get a print above that 200. But the algos are suggesting that this is probably the top of this. I mentioned this yesterday, that we had one more day up, and that yesterday I thought would be an up day, and it was. It was more extreme. We traded the RTX yesterday was 4015.92. The high was 4012.50, so we got pretty close to printing RTX yesterday. And like I said, today R2 is 37. I think that's a tall order. We'll see how it all comes together as we get toward the end of the day. And those of us in the live room will be able to watch this action pretty closely. But the algos are suggesting here that we're going to potentially challenge down around the 39 handle and potentially come down to the 40 period in here. So the next couple of days are going to be really critical that we hold above these support levels. Right now, the 10-period moving average is 38.81, and that, just going by the algo itself, it's suggesting we're going to get that print. Let's do a couple things here. I want to go through. I've flipped over to a weekly chart here, just trying to set up some of the ranges. The 40-period moving average, or the 40-week average, is very similar to the 200. You'll see it's at right now 40.45. We just talked about the 200 at 40.29. So that's going to be pretty major resistance. We also have PPM 3 at a minus 0.20. So there's a fair amount of resistance at this level yet. We're not at that point to get through. Sorry about that. What we're looking at here from the standpoint of the algos, we're still seeing stronger weekly projections coming out of the algos, which really is just suggesting here that we're going to stay above the 10-period moving average. It's down at 3800, 3801, and so the 21 has a reasonable support, which is 3928. So I think there's going to be a little backfilling, probably trading between the 10-week and the 21-week moving average as we go forward. All right, so we'll go to this. We'll start with the weekly NASDAQ. And there's a couple of things here that I want to mention. Like I said, we still have, NASDAQ has got a reasonably strong upside here. But once again, these PPMs are tracking these moving averages. It just tells us that the underlying moving average, the 10, is going to start to move up. It's at 11,300. So right now, it's still negative. It's still declining. So next week, all it's saying is it's going to turn up, and that's going to be where your support is. So the support's down below this market. So there's a lot of room for the market to trade in a sideways range, even though it appears that we're getting a upward slope on the PPMs. And when we look at PPM 2, that's the 21. It's really just flat at this level. So there's really not any deceleration for a little bit, but it looks like really just more sideways choppy range. Even though we got these upward projections here on the NASDAQ, there's several more weeks of work, it looks like, to be done. And we'll just have to see what sets up on the short-term charts here over the next several days as we come into, actually we'll be coming into the end of the month next week. So there's plenty of action and squaring up of trades to happen by the end of the month. Like I said, everybody is now at that phase where they're no one's talking about 22 anymore. They're getting ready for 23. So I'm expecting some window dressing to come in. Where that starts, no one really knows. It's really based on the individual institution and the people that are trying to get themselves situated for coming into year end. Almost everything after next week, folks, as we get into the 1st of December, everything's going to be about 23. Nothing's going to be about 22. It's in the rear view mirror. No one's going to be talking about it other than what happened. But all the action in the market is going to be trying to rebalance all of those positions out from that standpoint. Let's go ahead and go to the daily charts here on the NASDAQ. And just like with the S&P here, we're showing the algos are suggesting that today is the top end, and we're probably going to get a turn down on the markets as we come into, whether it's Friday, there's going to be a shortened day. That's what it's suggesting. But for the most part, we're still looking at staying above these averages on a short-term basis. PPM2 is positive, and that value is at 11,428, and we're currently trading 11,834 last. So there's the support as well underneath this market, but that gives us the room to just trade in this sideways choppy range here and not make any decisions before that final week. And like I said, not only are we coming into the year-end expectations, but we have a Fed meeting. We've got an unemployment report coming out next week. I believe it's next week at the end of the week. And so we've got a lot of things coming out from the standpoint of that's going to do more of that influencing of the rebalancing as we come into year end. Next, we'll take a look at the Russell. As with this is somewhat interesting. We had these upper bands. I've been talking about the Fibonacci targets on the Russell. We got some new ones, but it adjusted down where the S&P adjusted up. So once again, we've got a slightly adjusted down targets from 1975, 2034. The previous targets were 1990 and 2079. So they're moderated just a little bit from the pattern it's setting up, and the same patterns here on the PPM. So we'll see how this thing sets up. So what it's saying, the next couple of days, we should be coming back into some of the support. Fib target 1 on the downside here is at 1795, and that's just above the 1785 40 period moving average on a daily. So all of these indexes are suggesting there is going to be some slight downside, and I think that those numbers that we're looking at on the weekly charts, I'll just go over there to see if it's set up on a weekly. Yeah, it's a little bit different configuration here on the Russell than the others, but on both the S&P and on the NASDAQ, there's a fair amount of, matter of fact, not a fair amount, there's a substantial amount of resistance still at the 200-day and the 40-week moving averages. And those are both simple averages. So we should be able to get something going there from that type of action around these numbers. But definitely all this stuff is starting to look like it's going to be a bit weaker as we go forward. Yeah, so we had the manufacturing PMI come out. It came in at 47.6, and the forecast was for 50, so that's in contraction mode. Not sure. That could be, I guess, a reasonable report from that standpoint. Let's just go over real quick to a different screen here just to see what's set up here. They liked it. So we got a spike up here, all the way up back to the 40-30. So while I was talking, so we are getting this little blast up here toward these numbers that we're talking about. Pretty interesting that we got this spike up, and it looks like right on that, around that number setting up. So maybe there's a leak on something coming out in the patterns, but like I said, it looks like for today is the projected to be the final high, and it's interesting that we're printing right at some of those numbers right now. And we'll see, like I said, once we get the prices on Friday, and I'm going to be out of town, so I'm not going to have access to be able to set this up for you on Friday. So you'll be on your own. If you got the indicators, just watch for the algos to adjust or anything like that on the dailies. Once we get the first tick on the reopening, you should start to see some of this stuff. But down up to 25 here is looks like the high previous was 21, so we got a 21 high. So we'll see what happens here. All right, so let's go ahead and we'll circle back to the indexes here. We'll keep an eye on them as we go forward here. So let's go ahead and review the 10-year. The 10-year is continuing. This is the weekly. I've talked about this a lot, downward projections right now. 340 is a Fibonacci target. We also have the 21-week moving average down there, which is at 344. And the algos are all suggesting we're going to see the 10 roll over and actually get into a pretty negative mode. So as crazy as it seems, there is a Fibonacci target 2 is for basically a 3% target. I don't see that happening, but we're definitely going to challenge this. It looks like we'll challenge this 21 period area, which is 344. That's a crazy number to talk about when all you're talking about is the front end of the curve being jacked up, but the back end isn't. I went through that in quite a bit of detail from that standpoint. So just don't see anything, like I said, other than downside here on the back end of the curve. Next week, I'll go through the yield curve presentation like I do, but basically just looking at the back end of the curve to have a softer viewpoint. So you're going to have what everybody's calling the terminal rate. They have Fed funds at 5%. and then you may get a little, still have that little hump with the 2 up to the 13-week and the 2, and then you'll see the 5-year come down a lot based on this forecast. There's a lot that's going to be forecasting as far as the downward yield. So that back end of the curve is going to be even crazier. Let me I'm just trying to get this. Okay, yeah. So that back end is pretty. I'm going to go over to TradeStation here for just a second. I want to bring up the 30 here and just look at what's going on with the 30-year securities here. And there's downward projections right now for 373, last print 379. So we're almost at that fib target. But you can see how the back end of this thing really let go. We had our models on the 30-year suggested that yields are going to go up back on August 8th of this year. This was where we got a buy signal, which means the rates are going to go up. Well, we let that, and this is on a daily basis, we let that trade go. That trend broke down at 405. So we've been negative on this trend, and you can see the PPMs are just accelerating here. So this is a huge decline that's happening, and we're looking at a 200-week moving average, day moving average well below this. Let's look at the weekly. Weekly, we can see that there is some support here at 356. We're looking at a positive PPMs right in where we're trading right now. The weekly, right now we're at 375, 374.3 is S3, and STX is 368, and this is on the 30-year. So we normally don't cover that, but I just want you to see that back into that curve is a lot of downward pressure and yields right now. And even you can see the PPMs have rolled over. They're still positive, so there's some support, but the absolute, I'm just looking here, probably we're going to call around this level, this 370 level is going to be some pretty strong support there off of the weekly chart. So I expect that will start to settle in. But like I said, you're going to have the front end of the curve up here, and as you go to the back end of the curve, it will be sloped down quite a bit. And that has everything to do with demand on that back end. So real estate is still getting hammered. There's most of the sales volume are down between around 25 to 40%. Some of the hottest areas in the country are down about 45%. So everything's cooled down a lot. It has everything to do with interest rates. And even if they drop down to these levels, the premiums on the mortgages and everything, they'll be a little more attractive, a little more affordable, but I think everybody's kind of pulled back. And I think that market's going to stay under pressure, especially coming into the winter months, although there's some of the hotter markets are in markets that aren't really affected much by winter. So, not the East Coast, looking at, primarily Texas is still a very, very hot market. So anyway, but all those yields on the back end are going to be influenced by that lack of demand. And so just expect to see that yield curve stay inverted. And of course, that probably says we're going to have some sort of recession, but it's really hard. I won't get too deep into this, but it's really hard to be projecting a recession like from right now when we have all these employment metrics and everything. So this is a perfect time. I want to show you something I set up, and I'll share this with you. Is I put up something here that I thought was interesting, and I'm going to get off screen here so we can look at it. This here is this is the claims, and I ran the algos on the claims. We'll see if there's anything to it, and I also ran Fibonacci projections. So The claims came in a little higher. You can see they're starting to trend upward here. And the projections up here are fib targets 285, 321, 343. And I didn't have the time to find the symbol for the continuing claims. I'm sure that's probably in there somewhere. But the bottom line is, it looks like maybe over the next couple weeks, we're going to start to see this accelerate on the upside. So these claims numbers are going to start to climb. And these are interesting numbers, 284 over 300. And one of the things that I've talked a fair amount about when I've been covering this is that the initial claims are one metric to watch, and then the continuing claims are above 1.5 again. They get up around 1.75 million, and above that number, then we're finally seeing, I've been saying that the Fed wants to see the employment numbers uptick. So supposedly, right, they have two metrics that they have to follow, which is one, price stability, and then employment, right? That's their mission. Well, they're trying, I made this comment, they're trying to put people out of work so they can control inflation. So they're throwing one of their metrics and they're saying, well, it's not that bad because it's at, whatever, at 3.7. But I'm even seeing numbers. I ran the same number on unemployment, the same metrics. I'll just tell you about them. I won't show you at the moment. But they're suggesting that we'll get to an unemployment rate between 4.2 and 4.5. And that's not a big deal, but that we should at least get to that level. I don't see us getting over 5%, but they're definitely going to keep rates going. They're going to keep the pressure on. And they are absolutely obsessed, and as they should be, maybe with the inflation. But I'm not sure that the interest rates are going to change the inflation. And so I'm going to leave that conversation for another time. But I just want you folks to know that that this metric's out there. So let's watch this together and see if the algos are right about what's about to happen. It looks like the trend is starting to accelerate, and it looks like a thing. So we'll see here. So a lot of these things that I'm showing you, I want to walk forward, and we'll see together whether this is going to get validated or not. So next we'll cover crude oil. As I mentioned earlier, crude's off a bit. We're at 77.92, down 212 right now. I think that's the percent change. We're down 267. So we're seeing really the market coming down into this handle. We have a fib projection down here right now at 71.76. I talked about that a bit yesterday. Still looks like the algos are weakening here. So what it's telling us is we're going to stay under the 10-period moving average right now, which is 84.91. Yesterday we printed up to 82.36, and that average was at the 84.91. So it's coming down pretty good, and the algo is suggesting it's going to continue to press this market down. Possibly, it would be crazy if we did, but possibly toward the 200-day moving average. 200-week moving average on the downside. So this is the weekly trends that I'm talking about here. So this is going to keep. My guess is we're going to have a trading range between this fib target at 71 and the upside of right now the 10 of around 85. So I'm lowering my ranges on crude oil from the 82.92 down to 71 to the 85, 86 level is going to be. And that's what that's what these metrics are telling us right now. And if you look at all of the algos, and especially even on the PPM3, which is tracking to 40, which is this cyan line up here, it's at 97. It says all of these moving averages are going into trend mode, and this is a weekly chart. So this is not to be taken lightly. These are intermediate trends, and they typically will stay intact for quite a bit of time. Minimum 13 to 21 weeks is a typical trend, and you could argue that we've been in this downtrend here going back to June, so we could be getting close to the bottom of this cycle, but we could print down to an extreme. And typically the markets go to extremes when they're getting to this point where there's a final capitulation, and then they will start to firm up from there. And if what the Biden administration said the other day is that they want to buy in the 70 handle, they want to replenish the SPR. So now they're going to buy back a lot of that stuff. So yeah, so maybe there's a floor here. Who knows if they do that or not? We'll see. If there's I guess say that if there is a $6 or 6 handle out there, they're probably going to be a buyer. And so there's going to be some stability coming in the market, and they're begging for more production. This whole situation with Russia is not getting played out as well. They're trying to put, like a $60 cap, and Russia goes, well, we're not going to sell it for 60. So it's kind of interesting. Well, but maybe the market ends up there anyway, because that's what's being suggested. This 200 is 65. So maybe we're going to see this 60 handle. And that, once again, folks, just to tie everything together, that's also going to tell us that probably peak inflation, that story is going to start to evolve more as we go forward. And just talking as far as everything I've covered so far in the show, I kind of look at all of these markets are really part of the narrative that's out there between the interest rates and crude oil. I've talked a lot about crude is trading more like a financial asset than a commodity anymore, and it is a financial asset. So that's why it's trading like it is. But this is just telling us that this inflation narrative is starting to dissipate. And unfortunately, a normal week is Thursday is when I go through some of the commodities, and Friday gives me the time to go through some of these macro events and get into maybe a little longer term viewpoint. That won't happen this week because of the holidays, but we'll get into this stuff next week early on just to set everything up as far as it goes. So, but just know that this whole narrative is going to keep playing out. And as long as they can play this narrative, there's going to be a bid. There's probably a year-end rally on stocks coming. All this stuff is going to manifest itself in some kind of way in the equity markets. And that's especially if we get our database on Friday night, if we get over 42% on the intermediate database, that's just going to convince me that we're going to get more of a sustained move, and we're going to see probably first quarter. And I'll go through as we get to the end of this month. I'll go ahead probably next Friday. I'll go in and we'll cover the quarterly charts, because I set that up, and I told you I don't know, a month ago or 3 weeks ago when I talked about this, is that the secular and actually very long-term trends on the equity markets are still up. They're not in a bear market. And what we've seen is maybe the first leg of a correction of something larger, and that's what I'll set up when we come into next week. All right, next we'll cover gold. This is the weekly gold. Let me go over to daily real quick. We have rebounded a little bit off the lows, but this was the scenario that I was painting as we came in if you recall, going back 7 or 8 days ago, the algos were suggesting we're going to see some negative movement and go sideways right under the 200-day. That's exactly what we're done. There's still some downward pressure coming in. Looks like the 10-day moving average 1759 is going to be the major resistance above this market, and we should see it start to press things down. We traded almost down to the 40, so I think we get sandwiched between rounding off 1700 and 1760. I think we just get a sideways trading range here. Let's take a look at the weekly and set that up. And that's what the weekly is telling us is that the 10-week moving average is the major support is 1692 right now, and it is going up at about 5 handles. So it's going to be 1697, 1700 is going to be your major support. So I think we ultimately, for the next several weeks, set up a big trading range and be watching the market grid next week as it comes as it comes forward over the next several weeks. But I think we stay below the 40, which is 1800, 1803, and we stay above the 10, which is 1700. So we get this big consolidation range, and it won't be for a number of weeks. It looks like we're going to get some pretty decent upward movement here on the 10-period moving average if the algo projection comes into play. So we're going to see a number of things happen. Ultimately, we'll see the 10-week cross up over the 21, and that will set up a good pivot point in the markets, and I'll talk about that when we get there. All right, we'll come into Bitcoin. Bitcoin's hanging in there pretty good, around 16.4, 16.5. Still looking at the market grid. The interesting thing is STX is 13,516. We look at the low this so far, and this is the weekly. The low has been 15.4, S1 15.6. So we printed S1, R1 16.902. We've been 16.619. So S1, R1 has been the print. The thing I've been going on and on about is that we're seeing this big downtrend here that's being forecasted here. And I've talked to, I don't know, it's kind of a broken record, but there doesn't appear to be anything else to look at. And I just want you guys to know, I put out on my Twitter, there's it's almost ridiculous with this FTX situation. I think there's going to be some liquidations yet happen. This thing's not over. It's, 2 weeks old. And, there's still stuff going on. Meanwhile, this guy's running around doing TV interviews in the Bahamas, and everybody knows he's created fraud. I mean, don't want to get political, but did he buy protection? Is Maxine Waters protecting him? And it's a lot's going to get revealed out of this. I'm anxious to see what happens. But anyway, I put on Twitter, there's a petition going on about this guy, so check it out. I think this guy, I can't imagine that any of us would do anything that even looked like this, that we wouldn't already be in jail. That would fascinate me for that. But anyway, but I think the FTX situation is going to be a lot of challenges in Bitcoin and in crypto. I don't think it's really a thing against crypto, but I think it is looking at exchanges, and maybe, and I somebody help me out here. Why does anyone listen to anything that comes out of Cathie Wood's mouth? She's still talking about Bitcoin's going to be $1 million by, I don't know, I guess it's just a round number, 2030. Everybody, yeah, no one knows that, and I don't know how you do that, but I don't understand at all why anyone even cares. But the point is that all the crypto people, they're saying this, their positions talking. So if you have a position, you have a tendency, if you're long something, I'll just go into not too big of a rant here. Where are we getting here? We got about 12 minutes to go. It's really just people talk their position. All of you guys and guys make comments here. You're talking about your position. You're even long or you're short. You're telling me the market's going up or down. I know what that is. I just stand on trading floors with hundreds of people with opinions and money at risk, and everybody promotes their position. That's how I got the name Dr. Given when I was on the trading floor. So, and Dr. Given just said, I'd say it's going up, it's a given, it's going down, it's a given. And that's basically these same metrics that I show you folks every day. I've been using since 1980. They were actually created in 1984, 1986. It's guided my entire career. And, like I said, our software's ran hundreds and hundreds of billions of dollars in there. So it's been really tested in the trenches, so to speak. But my point is that all of this stuff that's out there, you just have to try to keep even perspective. I'm, I guess, anxious to see if these algos are right, because they're projecting a complete collapse of Bitcoin. And, I have no idea what's going to go on, but there's certainly a lot of challenges that are going to come up. I would not want to be Tom Brady and some of these stars that were promoting FTX. What a crazy thing. Did he meet that guy? I mean, seriously, I don't even need to hear the guy talk. All you have to do is, wow. So Terry Duffy, who is the CEO of the CME, I met Terry many years ago, because he started in 1981. I met him through some people I knew back in the 80s, and it was a passing. He wasn't a friend or anything like that. But I did meet him through a group of people that were he was on a Merck, I was on a board of trade. There was a group of us. But what he's been saying, he said he told this guy to his face when he came to the CME that he was a fraud. So anyway, FTX, this thing is not over. And I certainly hope they get to the bottom and find out where the dirty money went and really expose everything there. I'm sorry to get on a rant, but I think it's very upsetting to see when you see the integrity of markets from any place be affected. And you're looking at a guy that has been doing this for a lot of years, spent time on multiple exchanges trading on the floor, and to see any exchange, any industry disrupted at this level is just appalling. I mean, I just want to go into a mad rage. I guess this is as far as I'll go, but it's just ridiculous. So anyway, I'm done. But yeah, so let's come back on screen here. We've got about 8 minutes to go. Yeah, so exactly, Donald. Yeah, I mean, we all that's how the world works. And I remember guys that used to be on the trading floor, and they're talking. Yeah, I think so and so. This is going to happen. That's going to happen. My first question was, do you have a position? And if they said no, I just walk away, because there's nobody with a good opinion doesn't have money attached to it. And so you have to, yeah, it's just the way it is. And it's always been that way. So if there's no money attached, it's probably not a very valid opinion. And it doesn't make it right if you have money attached. It just means that you're talking, you got your money where your mouth is. You guys know what I'm talking about here. Yeah. So I see Brady supposedly lost 500 million. Good. I hope he did. You know, yeah. Let me just see what you guys are saying out there. Yeah. Yeah, Mike, I see the tulip comment, all that stuff. Yeah. Yeah, listen, there's a lot of nasty, dirty stuff on this FTX situation. There's I mentioned before, there's a couple pretty good spaces out there on crypto, and they've had there's one in particular that I've listened to. Let me see. I usually don't promote anybody, but I think they've done just probably one of the best jobs that I've seen for a while. And if I can find them really quick, yeah, here. I just saw them. Hang on. Then my Twitter feed updated. Bear with me 1 second. Mario Nawfal, Nawfal. It's running some really good spaces and some really interesting people that have been on that. Last week was really epic on some of those, so you can check out some of those spaces. I think there's some good stuff there, and I think, yeah, I think we all have to be diligent. If you take I went on YouTube and just put in Terry Duffy, and he's CEO of the CME, and CME is monster, and I saw a couple speeches he's done. Interesting guy, and he speaks from someone that has run a real exchange and had a lot of challenges. The story, I mean, I hope he writes a book on his path, because he's been around, at a high level since I think 2001 or 2. And the old firm I used to work for, our chairman of our board was also chairman of the CBOT, and the company that I was at the time had a bad actor in there in the CFO, and he blew up the firm. We were the largest commodity trading company on the planet at the time, and talk about tarnishing the exchange. At that time, it was pretty ugly. There was a lot of us very upset. So I've been involved in some interesting scenarios, and this brokerage firm went out of business in about 10 days. I ran the third largest division at the firm. I could write a whole book about that. In fact, I've talked to a couple of buddies of mine that I said we should put our thoughts together, because it's not as fraudulent as FTX, but it had everything to do with the financing of the firm, and some really bad decisions were made, and there were some circumstances as well that caused the collapse of the company. And so it was very depressing for I would say for 15 years. There was a group of us that got together every year in Chicago, basically to mourn that company, because we all loved it at levels. I would have never left there. You wouldn't be seeing me on YouTube right now. I would be there, and I could mention a whole bunch of names. We would all be there if we could have. So, so anyway, I think Terry Duffy's interesting. I think when you get these fraudsters like this guy out there, it's unbelievable. So anyway, I think I'm done. Yeah, so anyway, folks, it is about a couple minutes to go. I'm just kind of looking at some things and what you folks are talking about. So for the most part, this is going to be it for this week, and I'll finish off on that note. But I love these markets. I love what I do. I've been doing this for 43 years now. I'm 70 years old, and I still want to be here every day. I want to be involved in these markets and will be as long as I can be. That's my goal. I'm not a retire kind of guy. I love this stuff. And when I see these bad actors come out and they tarnish industries, they're just, man, yeah. I have to moderate what I want to say. I can't say what I want to say. But the point is that these people need to be taken to task on all of this stuff. And it's kind of bad to see the world we live in, these really bad actors, no matter what they are, they've done, as they tend to get away with it. It's, I'm telling you, none of us on this broadcast would get away with anything close to it. It just makes you angry. So I think I'm trying to get out of this loop, but I really appreciate you folks and everybody that comes to these streams. Tell your friends. I'm going to stick with this time slot. I feel like I alienated, not intentionally, a lot of the folks in Asia and in Europe, because I had a big evening following that was early Europe and Asia folks that were around Australia, all those folks. So I know when I'm doing this now is, literally middle of the night. So, but anyway, just tell your friends, let's get this thing really going. I'm hoping that as we go forward, we're going to have some more things going. Next week, I am going to start the PortfolioXpert and Wavetech. I think it's going to be really important for everyone to go forward with, is to have products like that are going to help you manage your money. I keep telling everybody, stop speculating with your 401ks and your money and start managing your money, and you're going to be a lot better off and moving everything forward. And so anyway, folks, thanks again. Have a great holiday, those of you in the U.S., and have a happy Thanksgiving. And I will see you all next Monday. So have a great day. Those of you in the live room, see you in a couple hours. All right. Have a great day, everyone. Yeah, when the database opens on Friday, I'm working on putting an algorithm together for our Discord. We're still working on getting Discord up to speed. That there's some auto feed that goes in there. I'll let you folks know when it's there. Have a great, happy Thanksgiving, everyone. Yeah, don't forget to hit that like button before you take off.